Yo, what is good? We're back with another video. Today we're going to be going over market maker models and how I am trading market maker models. So we're going to get right into the video. If you're not in the free Discord, go join it. It is linked down below. But other than that, let's get right into the video. So the whole point of market maker models is the idea of sell side of the curve into buy side of the curve, or if it was vice versa, buy side of the curve into sell side of the curve. And whatever opposing side is on the left side, in this case, it is sell side of the curve over here. That side is engineering liquidity so that buy side of the curve can offload their position above each high that the opposing curve has created. So all these lines right here are representing highs up until the original consolidation has been achieved. So in this video, we're going to be going over entries, low risk buys, what to target in the original consolidation and all of that. So let's hop right into what a market maker sell model is first. Right here, we have a depiction. I know it is kind of ugly. I'm not the best artist, but this is what would be a market maker sell model. So over here on the left side, we have our original consolidation. What is happening whenever we are creating all these lows? It is engineering liquidity. So whenever we can get our smart money reversal inside of a higher time frame PD array, we can start to get our sells in and offload our position under each of these lows until the original consolidation has been achieved and the sell side of the curve has been completed. So what is a smart money reversal? Up here it is abbreviated SMR. Smart money reversal is whenever smart money is reversing price to go on the opposing side of the curve inside of a higher time frame PD array or an old high. What is the LRS? Low risk sell. It is the 2022 ICT model. You get your market structure shift right here with a bearish fair value gap. That is your 2022 model. You short the fair value gap and then target the opposing side of liquidity. And within sell side of the curve, we have each of these distribution stages. Each of these distribution stages will trade into a bearish fair value gap. And the idea that bearish fair value gaps are going to be respected because we're on sell side of the curve, they should be respected. Whenever we are in a market maker sell model, we want to see up close candles getting rejected by price. So every up close candle that is created inside of the market maker sell model, we want to see price reject away from it. So right here, we get our smart money reversal inside of a higher time frame fair value gap, an old high, an order block, whatever it may be. We get our market structure shift to the downside. We get the ICT low risk sell ICT 2022 model right here. Fair value gap, bearish fair value gap traded after we get our market structure shift. And if you want to be conservative, wait until a candle body closes below this low. Then we get our distribution phase one right here whenever we trade into a bearish fair value gap, trade lower beneath another low where we are offloading shorts. We get our second stage of distribution right here whenever we trade into another bearish fair value gap, and then we target that original consolidation. Right here is the PD arrays you want to be watching for. If we run into a weekly PD array, you want to see a market maker sell model or a buy model on the 4-hour chart. Daily to 1 hour, 4 hour to 15 minute, 1 hour to 5 minute, 15 minute to 1 minute. And then if you're getting really risky or you want to trade quick price action, 5 minute to the 15 or 30 second chart. So let's hop into a 4-hour PD array traded on a 15-minute sell model. So right here on the 4-hour chart, you see price right here with this wick trade into these old highs and inside of this 4-hour imbalance. So if we head down to the 15-minute chart, we see that price had an original consolidation right here, expanded higher. And what are we doing with all these failure swings? We are creating and engineering liquidity. So right here, whenever we finally trade into that 4-hour PD array, we get our smart money reversal, displacement beneath a low with a fair value gap. Here's your low risk sell. And then here we get our first stage of distribution during New York. All this is Asia. So right here during New York, you get your distribution phase one, distribution phase two. And then right here, we finally take out that original consolidation. So right here at the 4-hour PD array, displacement beneath a low, 2022 model, displacement lower, New York opens, displacement lower, distribution phase one, displacement, distribution phase two, and even it gives you a third entry before taking out that sell side liquidity right here. So if you watched my standard deviation video, you know what we can do with a manipulation and smart money reversal leg take your standard deviation to the high, to the low of the leg that took out liquidity. And where do you think 2 and 2.5 line up? Perfectly with that sell side liquidity for the original consolidation right there. So if you're not using these standard deviations, I suggest you go watch that video and learn how to use them. But anyways, let's go over how you can trade this intraday so you're not waiting forever. So we'll do a 15-minute to 1-minute PD array. So right here on the 15-minute chart, we see we have a 15-minute fair value gap right here. And if we take a look, we never took this sell side liquidity yet. So now we have two different targets because we're going to have an original consolidation right here on the 1-minute chart. So heading down onto the 1 minute, right here is our original consolidation. So right here we trade up into this 15-minute fair value gap. And this is what I would not do. I would not be shorting this. I would be waiting for a stop run because notice this entire way up we never had a stop run yet. So right here, after we take this high out, this is when I would be waiting for that manipulation leg. So here we get buy side liquidity taken out. Right here we get our manipulation leg. So what do? Pull up the fibs. And where does 2 and 2.5 line up? Right with that original consolidation and that sell side liquidity. So after we get that, right here, we get our low risk sell. And you would actually use the volume imbalance as well right there. So low risk sell right here. We get distribution, distribution right here whenever we trade right back up into that. And we get another stop hunt. So right here, we have another manipulation leg. Boom, boom. 2, 2.5 line up perfectly with this -2 and 2.5. And where do we go? We go straight into that original consolidation. So right here, I would not be taking this. You can, yes, you can take it here, but I would be waiting for that stop run right there because we never had any stop run or manipulation leg within this entire run up to buy side of the curve. So we have buy side of the curve right here trading into that 15-minute. Right here we get that displacement, no stop run, no stop run. Okay, we have a stop run on this high, no displacement, stop run on this high, no displacement. Right here we finally get that manipulation, and I would not be taking this fair value gap. Why? Because we have no displacement through a low. So putting all of this together, you can start to see how I'm framing my entries. No entries over here because we have no stop run. We have no manipulation leg. This is when we finally get our manipulation leg, and that is whenever I would be looking to take this low risk sell or this distribution phase 1 right here. So now that we have that gone over, let's look at market maker buy models. So right here, MMBM, market maker buy model. It starts off with the original consolidation as always, and then we get boom, failure swing, boom, failure swing, smart money reversal. Where? Can you say it out loud right now? Inside of a higher time frame PD array. So right here, smart money reversal, expansion, we get our market structure shift right there. We get our low risk buy, expansion higher, accumulation, boom, expansion higher, reaccumulation to finally take out that original consolidation. So let's head on to the charts and look at some market maker buy models. Okay, so for this market maker buy model example, I want you to take into consideration this 15-minute fair value gap down here and this 15-minute breaker right here. Right here, as well as this 15-minute fair value gap. So we'll mark out the fair value gap since it is smaller, but both of these are going to turn into market maker buy models. So heading down to the 1 minute, if I can come over here, where is our original consolidation for this 15-minute fair value gap? Right here. We have an original consolidation up here. And you can use this one as well, but I would be looking at this one because we have a stop run right here, and we would be targeting this high. So this is how I would be framing my entry off of this 15-minute PD array. Here, no entry. I would not be taking an entry here. Here, not taking this fair value gap. this is when I would finally be looking for my first entry. After we get this manipulation leg, we take out a swing low. So now we have a stop run, right? I'm always looking for these stop runs. So what do? Take out that little standard deviation. Where does it line up? With this original consolidation. Okay, so now we have our smart money reversal up here inside of a fair value gap after hitting that 15-minute PD array. Here we get our low risk buy, first stage of accumulation, and we get our second stage of accumulation right here before taking out that original consolidation right at the -2, -2.5. And what does that mean? It means we are going to be retracing to equilibrium of the range. So we don't get there, but from this stop run we do. So now that we have reached -2, 2.5, we're waiting. So right here we hit that 15-minute fair value gap that I showed you to keep in your mind. So this turns into a market maker buy model. We have original consolidation right here. We have our low risk buy. We have we have first stage accumulation. Do we take it out right there? Yeah, we take it out. So boom, right there. And also this can be considered accumulation phase 1. This could be considered accumulation phase 2 because we run this inverse fair value gap. So what does that mean? We are disrespecting PD arrays. So low risk buy, accumulation, accumulation phase 2, boom, taking out original consolidation. So what do? Long the low risk buy after we get that expansion and run this inverse. Okay, now we can long again. Long here. Or you can long up here if you want to be more risky. Where is your stop? After we expand out of this, we should not be running this low risk buy right here. So stop here. Where's your target? That original consolidation. So now you have 3 different entries on this little tiny pullback market maker buy model, sell side of the curve into buy side of the curve, taking out that original consolidation right there. So 2 market maker buy models off of 15-minute PD arrays in the exact same day, off a retracement and a 15-minute fair value gap that was from way before. So now that we have that out of the way, let's go over another example. So right here on the weekly chart, we have a market maker sell model being in play. So right here we have this weekly fair value gap. Heading to the 4-hour chart, we have our smart money reversal. We trade through this high and then get displacement lower. Right here would be your low risk sell. So this big box, just remember we traded into this weekly fair value gap. I'm going to get rid of it. So right here would be your low risk sell. We have a manipulation leg. And 2, 2.5 does not line up perfectly with that. So we'll get that off there. So right here is first stage distribution. We should not violate this high. Right here we get second stage, and then we trade straight down into this original consolidation right there. So we have original consolidation, buy side of the curve into that weekly imbalance, also trading above all these old highs with that manipulation leg, and then we get our low risk sell distribution. And do we have distribution phase 2, and then we trade straight down into that sell side original consolidation level. So I hope you guys enjoyed the video. If you're not in the Discord, go join it. It's a link down below, baby. We're almost at 100 members. Other than that, I'm out of here. Peace.